Hey guys, welcome back to another video. I hope you guys are having a great day. As natural gas is showing some signs of recovery, more news is starting to come out. Australians Albanese says natural gas investment shouldn't be curbed. If you do not know what curb means, it means restricted, so it shouldn't be restricted. On the other end, China's gas imports is down 9% in January and February compared to last year, which is a significant drop, but we know in April even the smaller businesses in China are slowly starting to put their order forward for natural gas. Obviously 2022 was not the best. Before we get into all of this, if you guys are here for the first time, do want to stay up to date with everything to do with natural gas, scroll down, tap the red subscribe button, right there, slap a like on the video for the YouTube algorithm so everyone can stay up to date with the natural gas info. Now the reason this is really interesting is because the government faces a criticism for proposal to curb the gas exports. So pretty much the government decided to put out a proposal, it has not been finalized yet, to curb gas exports, so pretty much restrict the export of natural gas. Country also seeking to cut emissions from the largest polluters. Now obviously the people were not happy with this because natural gas is one of the largest industries inside of Australia, should be permitted to follow the most promising returns on capital, said in his first defense of industry since the government proposed tightening export rules. I mean, I personally do agree with him because obviously, yes, some restrictions are okay, but completely cutting it off would not be a good decision for the economy of the country, and especially being natural gas being a very large producer of the economy in Australia. I think the government is not taking the right step. On the other end, China's gas imports are down 9%, but if you do decide to read it properly, the country imported 17.9 MN metric tons of natural gas in the first 2 months of 2023, compared with 19.7 in the same period of last year. So as you guys can see, it is down about 2 MN, which is quite significant. That's close to a 10% decrease as the title is saying, and it is a little concerning because China is one of the largest users of natural gas during the winter season. The cost of imports dropped 9.2%, and owing to the recent drop in the global gas price. Will this have a bigger impact on the price? I do not think so, because in the long term, as I mentioned, even the smaller businesses that have not asked for natural gas since 2021 have officially put their order forward inside of China that will be going through and making it all the way to their location in April. Personally, I'm really excited to see what sort of impact it would have on the price of natural gas as well. If you have been paying attention to the market, as you guys can see that once we did have this swing and we had another fall down, since then we are starting to see a consolidation period. If this does follow for a little bit, I'd personally not be surprised if these are the two zones that will bounce off, which will be close to 2.5 and 2.6. Personally, I would not be surprised, but there is a huge chance if we do decide to break above the resistance of 2.6, there is obviously going to be turn in the super trend, and if that turn does decide to come in the near future, obviously the price will keep climbing for natural gas and there will be not much slowing it down. Right now the trend is obviously starting to just get into a consolidation period, so there is a little bit of time for the whole of the market to recover. Personally, I'm really excited to see, because you guys can see that from the top to the bottom it has been quite a significant downfall, but if you compare it since over here, which was the 22nd of February, we're still in a quite strong uptrend, and we are sitting on the final support before the market actually declines quite significantly. If we just decide to keep climbing from here, this could be just another lower low, which is not going to play a significant role when it comes to long term. Another thing which is really interesting is rising demand for plastics to drive oil and gas use in 2023. What they're trying to say is the demand for oil and gas continues to increase despite outlook produced by the International Energy Agency that show it is peaking over the next few years. A contributor to this is a rising demand for plastic globally. growing population and rising GDP, we will need more plastic, and at the same time in the near future we will be requiring more oil and more natural gas as well. The plastic consumption by 2050, the plastic consumption increased by 400% since 1980s, so it is most likely going to increase significantly as well. And on the other end, we do know that fossil fuels and also natural gas will also have a huge increase in the demand. As you guys can see, by 2050, 20% of the global oil demand will go into the production of petroleum. Personally, that is a little exciting because that will have a huge impact on increasing the price of oil. As we're getting closer to 2050, you guys need to understand that obviously the oil around the world is starting to decrease, so we will have to rely on other sources to be able to do the same thing. Now, another thing which we talked about is finally back up and running very soon. Equipment failure disrupts UK natural gas exports to Europe. Now, this happened on the 4th of March and it will be back up running on the 8th. Right now I'm in New Zealand, so it is already the 8th, but I'm pretty sure in the UK there's still 24 hours before the natural gas export starts to Europe again. This will have a positive impact on the price, and I also want to mention I'm not on either side. I am just giving you guys the non-biased info. On Saturday, natural gas generated 53% of British electricity, followed at a distant second by nuclear. This is a huge reason why natural gas is going to be in demand for quite a long time. Another thing is Guyana sees natural gas as the next frontier after oil. The South American country we know is one of the largest producers of oil in the last decade, and seeing that oil is slowly running out in the country, they said that natural gas is going to be the next reserve they will be tapping into to be able to make the most profit and keep the country going. Another thing which is really interesting is the TTF front month gas price drops to the lowest level since August 2021. Attention has now turned to how the continent will get through the next winter. As the price is dropping so significantly, will a lot of countries decide to just store natural gas while the price is low, or will they be waiting for the price to drop even more, or just wait until it comes back to normal? This will be a very interesting thing to wait and see for. Now, LNG JV launches a fully integrated feed. LNG is expected to have a liquefaction capacity of up to 6 million metric tons of LNG, with the first production expected to be end of 2027. So this is going to be another source we will be able to go ahead and get more natural gas. The demand will stay the same, the production will start to increase, but this will be starting in 2027 by the end of it, and early 2028. So there's a bit of time before we are able to see more momentum. Right now, I am personally very intrigued to see how natural gas will react on Thursday when some of the reports will drop. Personally, I am very scared for the people who are high leverage trading. If you are a high leverage trader, be a little careful. I'll keep you guys up to date what happens on Thursday. I hope you have a great day, and I'll see you guys very soon. Subscribe, drop a like on it, and I'm out. Peace.